Governance is an extremely important consideration in EM investing. We believe that it reflects on management's ability to be forward-looking and to be reliable and transparent. Our process really hinges on developing a 5-year financial forecast, and for this to have any value to us, we need to be able to rely on management, and we need consistent reporting and transparency, and all of which is assessed through our corporate governance work.
Governance is really critical in EM investing, and this is perhaps one of the most important sort of things that you gain with experience in this asset class. And I think it's very important to have a high standard of it, but also to understand that we operate in a universe that is very flawed on that respect. That if your idea is to create a universe that is only the highest standards of governance in emerging markets, you're going to have a universe of 10 names. And that is not reality. I think as EM investors, we have to go broadly and look at the opportunities in emerging markets. So when you say, well, I'm going to enter this very flawed universe, how do I approach that? Do I do selection lists and exclusion lists? We don't believe that that is the right way. And this is coming from our experience. Why don't we believe that? Because we have seen the best become the worst and the worst become the best. And the important is not to say who is the best. It's like who's going from being very bad to improving, because that can have a tremendous positive effect on a stock. So it's capturing that inflection point and understanding this tendency is what is very important to us.
We have 9 different items that we score these companies in, and that goes straight to the valuation. So after we finish our fundamental analysis, a company could have as much as 60% upside or 40% downside from the target price when we look at the governance scoring. It affects decisively for us the target price and the upside estimate that we have for these companies to invest in. There are companies, for example, that have the minimum score, which means that even if today these companies are trading at relatively depressed levels, there is no upside because our target multiple after the governance score reflects actually a downside after cutting down as much as 60% of their target price.